Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, October the 18th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. A little bit of economic data today. Across the pond, we got CPI for Great Britain came in at 1%, was expected to be 0.9%, and then core CPI came in at 1.5%, and it was expected to be 1.4%. So pretty much in line with expectations there. Then here in the United States, we got our own CPI, which is Consumer Price Index, came in right in line with expectations at 0.3%, was expected to be 0.3%, and the core CPI came in slightly lower than expected at 0.1% versus the expected 2%, or 0.2%, I should say. Then we also got the National Association of Home Builders Market Index that came in at 63, was expected to be 64, so pretty much in line with expectations for all intents and purposes there. Right now we have cats and dogs living together. That's something we used to say on the floor when basically all markets were up in green territory because everybody was happy and their positions were always looking good. So that means like the equities, crude oil, the bonds, all up on the day as we speak. The overall markets with the crude oil /CL we can see is up just 3 cents, but is back up into that $50 a barrel range, breaking that psychological barrier and testing the value area high here. Then we got gold up about $7 on the day and testing this 200-day moving average, which should act as a bit of resistance, and as it has before in the previous week. On to the bonds. Bonds up again today, and they are up 15 points, a half a point, 15 ticks, a half a point, and really finding this 50 Fibonacci level as a big support or resistance area, depending on which side we're on. Really, the bulls and bears are fighting over that line in the sand. Then on to the Dow Jones Industrial Average. We've got Dow up almost 100 points, 97 right now as we speak, but off at the highs of the day. Still, really, for all intents and purposes, beside this one outlier day, we are stuck in this range going sideways. The Nasdaq pushing higher by 50 points as well. Yesterday we were stuck on that value area of the volume, if you will. You can see the time has been spent down here. This is where the most volume has been spent, which is a bit odd as in the separation. I thought we would start seeing this fill in, and then you start seeing a big bell curve. That's usually what we kind of get from that. It's pretty close to it anyway, I guess. Anyway, Nasdaq up on the day as well. Then we have the E-mini S&Ps pushing higher by almost 15 points, 14 points right now, and again, still within this range-bound area for all intents and purposes. This is the breakdown of the E-mini S&P on a 5-minute or 15-minute chart, I should say. Off those data points that we got this morning, the overall market actually started sliding a little bit. Maybe they were expecting a little bit worse numbers after seeing the manufacturing numbers yesterday, but here we are pushing higher and looking to probably try and print the overnight area in there, which that would have been just before the open of the New York Stock Exchange. All right, on to a couple of things that I've done. IBM, I tweeted all of my earnings trades out yesterday late in the day right after I put those on. And IBM, I have on a long call spread that's not working out very well. And so I decided to try and lower my cost basis on that, not really change the directionality of it. But I went into the October and I sold the 147 puts. And I did that just to keep that directionality to the upside. Sold those 147 puts for, 74 cents. Bought them back this morning for 43 cents. So a nice one there. The one that really got me stung was Netflix. Knocked it out of the park, basically doubled their earnings expectations on this. And as you can see, up almost 20% on the day, which is just absolutely killing it. I went outside of the market maker move, or what the expected move of the market was, by a couple of dollars. Thought I was pretty safe, and sold the October 114 calls, and thinking that we were heading into this regular season of TV and they might see a little bit of a drop off. Guess what was happening was everybody was buying up or using Netflix, going to Netflix and getting ready for the new seasons by watching all the old seasons. So they knew what was going on, getting ready for that. That's the best I can come up with for that, but they really knocked it out of the park. Anyway, those obviously were in the money. I just decided to cover them. I wasn't going to fight this trend on this one. Sometimes I'll take possession of those underlyings and then start lowering the basis, but on this one they really could be blasting off to test the new high, so I didn't even want to get involved in that. I just decided to pull the ripcord on it. So on those October 114 calls that I sold, I originally sold them for 90 cents, bought them back for $4.80. So that was a little bit painful, but hey, one thing is we're playing this for probability, so at least I've got that probability out of the way. Now it's should be smooth sailing for the rest of the earnings season. That's the way I'm going to look at it. On to the next one was UAL. Now this one I haven't covered yet because it is testing me on my calls. I thought that the United Airlines wasn't going to be doing too great, so I went in there and did the October, sold the 55 calls, and I originally sold those for, I think it was 49 cents. So I'm trying to get out of those right now for a scratch. Right now it's a little bit higher than that. I think it's trading closer to 60 cents. So I'm going to kind of wait that out. I'm above where we are trading. I don't really see it going much higher. They didn't do that great on earnings, so I'm going to let it play out a little bit. It seems like this bit of a move is more along the lines of the rest of the broader market pushing higher, and it's benefiting from that. A couple of other earnings trades that we've got going on. Oh, this is GDXJ. I took this one off. If you remember, it's in October, so I didn't want to play around with it too much longer. It finally went into profitability today. But if you remember, I originally did the October 40.52 strangle. It immediately went again. I mean, for a while there, it was looking pretty good, but then, this happened right here on this bar. We dropped down, started testing my 40 puts. It actually went down, tested my break even. So at that point in time, I rolled those 52 calls down to the 42 calls. The original 40.52 strangle, I collected $1 for that. When I rolled my 52 calls down to the 42 calls, I collected another $1 on that. So now that we've rallied back, it was getting up there pretty close to the 40 mark. I covered it a little bit earlier. It was before those calls went out of the money, so they're probably a lot better now. But hindsight being 2020, I got out of that October 40.42 strangle at the end of the day for $1. So all in all, I collected a little bit over $2 for that. Got out for $1, so that was a nice little win. And had I waited, would have looked a lot better. But again, hindsight being 2020, hopefully some of you guys have held off on that and are looking pretty good on it. That's about all I got for you guys today, other than going into earnings season. We're talking about, we've got Intel coming out with earnings, which is somewhere down in here. That's not Intel, but we've got Intel, we've got Yahoo coming out with earnings after the close. There's Intel, Yahoo down here. So I'll be looking to play those. So follow me on Twitter at Wolfman's blog, and you'll see what I'm tweeting out, what I'm looking to do with those. probably, I don't have a whole lot of directionality on these other than Intel maybe to the upside and Yahoo to the downside. All right, that's all I got for you today. Friday's webinar is going to be on long strangles. You know, I like to do a lot of short strangles. I'm going to be talking about how you can build a long strangle strategy and increase your probability of profit with the way that I build it up. All right, if you can't take that, take it easy.